Start on gold. Okay, Gerald, gold. All right, let's look at this. This is a complete Elliott Wave 5 pattern that just happened on J signal. And I really like using this 3-sim wrinkle a lot to look for Elliott waves. The best way to do it is if you get a recent high or recent low in the market. This is a recent high. And then you get back inside of HVA or LVA, really works well. Or if you have a trend change on J signal, works well also. Okay, as long as it's a recent high, you can take this leg here, all right, a recent high. Once you get a trend change or get back inside a profile, this told you you're possibly working on a wave 2 up into wave 3. Wave 3 should stop right around 62% retracement. So that arrow was qualified anyway. So that's a 3. And then this leg on wave 3, the wave 5 should stop right around 62 to 76% retracement. And there's your arrow on that. So you want to try to get on the impulse wave 3 and impulse wave 5 with trend. These are your two most important Elliott waves out of an Elliott wave cycle. These are your biggest impulse waves you want to get on. And the really easy way to look at it is if it just did a recent high, and then you get back inside a market profile, it should work on a wave 2 ABC short on a number 3, or if this could be a big arrow down on my J signal too, like this. We can have an arrow down that just fired off right there also, like that. Then you know it's a wave 3 possible down too. So we talked about this pre-news. We talked about taking arrows with trend with J signal. And we know that. That's one of our methodologies, taking these arrows with trend only. You can let the market settle down for 5 minutes after news events. Unemployment claims were today. And you try to get on these wave 3 and wave 5. Okay? You don't really have to be a great Elliott wave technician. These arrows really help you out. All you got to ask yourself, have I come off of a recent high when I get back inside a market profile, or when I have a trend change, a big red or blue arrow? It's as simple as that. Look at this gold. Right there it is. There's our target, guys. Target has now been hit. I said 1313 was the target on gold. Now what I did pre-market is this. Every Thursday, I come out with levels. When we were all the way down here at 1311, 1312, I said the major level was 1320 to get short. I said if we get a big 5-minute bar up, wicks don't count. As long as we get a pull-in bar, you can use a hard 15-tick stop on number 1 trades on the major levels, and that caught the reversal. Then it actually went into an Elliott wave pattern here, 3 also. This is a 3 pattern short, and it had a 5 pattern, and then the Elliott wave started again right here when it got back inside market profile. We had actually 2 back-to-back complete Elliott wave waves, because here started 1. I said 1320 was major resistance at 8:30 when it was at 1312. Sure enough, we got the high on that little sucker. That was nice. If news is too fast for you, you can wait for an Elliott wave cycle, try to get a wave 3. There's your recent high. There's your trend change with the big red arrow to say that's a wave 2, especially if it's a recent high. That's a key word, recent high, keyword, recent high. There's a wave 2, and look how it caught that ABC 3 pattern right there. So went through 2 really strong Elliott wave cycles where the arrows caught this. The arrows caught this both times. And that's what the arrows are designed to do. You want to try to get on the Elliott wave cycle. You want to try to get on the Elliott wave cycle. Here's a mini 5 or even 5 over here, either one you want to do. Just as long as it's a lower high. So, but that's how you do it. 1, 2, 3. 1, 2, 3. You can see the pattern. The pattern is really easy to see. Recent high, trend change, that's a 2 pattern. 3 pattern up. After you get that big trend change, should be the biggest wave down. This is a big Elliott wave 3 down. This has started the whole thing. Then you got back inside a market profile, started a minor Elliott wave right here, is a minor Elliott wave here. The reason, the easy way to see number 3s, once you get a trend change and it's a recent high or recent low, it should give you an arrow between 62 to 76%. That's really easy to understand. It should stop between 62 to 76% for the 3 pattern short, wave 3 or number 3 trade or Elliott wave 3. I want you to try to get on the number 3s and number 5 shorts. That's the biggest pattern you're going to get. These are the impulse waves, 3 and 5. One's just going to show you the recent high or recent low. 2 is going to show you where the retracement should happen, the counter retracement. 3 is where we want to get on. 3 is what we want to get on once we get back inside a market profile. 3 is what we want to get on once we get a trend change, retracement, short arrow. Then I set my targets all the way down here at 1313. Why'd I say that? I said that all the way up here, even before the market even took a big hit. 1319, I set our targets 1313 on our subsequent position. Why? Because that's where market profile is. Once you get inside HVA, we should gravitate back down to LVA. The beautiful thing about this is what's called a shark bite trade. A lot of traders ask me, they're like, why do you have a shark on your website? Well, back when I first started opening up this trade room, it's one of my unique trades I used to do. And I actually used to page traders in the trade room when this trade came up. And what a shark bite trade is this. When these two moving averages get out of alignment, if you look at the dominant moving average at 1314 and 1312, I asked traders right when I logged in the room, what's the trend? They all said down. So I said no longs. We're only taking shorts. So we either break 1310 and continuation, or we try to get the major level at 1320. Minor was at 1317. So we got to 1320, and then all of a sudden, look for arrows with trend. The easy way to trade J signal, look for arrows with 5-minute trend. 5-minute trends down. So all you do is look for Elliott wave patterns. Look for a 3-pattern short. 3-pattern short. The easiest way to do it, if you just came off a recent high and you get this big red triangle, that should be wave 2 up. As long as it stops between 62 to 76% when the arrow prints, it did it there. Recent high, get back inside of HVA, market weakens, stops there. For wave 3, wave 5 stopped exactly at 62%. So it doesn't matter which ones you took. Here's an arrow short, here's an arrow short, here's an arrow short, here's an arrow short. 1, 2, 3, 4 for 4 on J signal since the news released. All right, or if you took the number 1, catching that high, if it's too fast for you, then wait 5 minutes and take these arrows, because this one, it happened around 6 minutes or 7 minutes after the news released. You can't miss this. If you miss this trade, you're giving up a lot of ticks every day in the market, because that trade came out and smacked you right in the face. Why? Because we were already in a 5-minute downtrend, but then it got back inside a market profile, which is major weakness. So that told you the arrow short is beautiful. Wave 5, since you already know this is wave 3, stopped at 62, 76%. Beautiful. These two trades were textbook. And you can't miss those trades if you're going to be a competent trader with J signal. You can't miss these two, no matter what. Because you can't let this market come all the way down to 1313. That was my target on this, on pre-news and news after news. And then all of a sudden you want to start trading signals now. You should be done. Shut your computer down. You're done with gold. You're done. You already got two big wave patterns. J signals already gave you all the signals on the way down. You're done. All right, all based upon a very simple Elliott wave 3 and 5 impulse wave. The 3 and 5 impulse is what we got to get on, and we got to continue to do that all year long. Okay, really easy way to see it. Now the easy ones to see, if it just came off of a recent high with news, then you get a trend change. Then if it stops at 62 to 76 and get the arrow, you know it's an Elliott wave 3 because it's a daily high or a recent high. Those are the easy ones. Daily highs or recent highs, man, they come out and smack you in the face. Market comes straight up. I mean, if you can't tell that's not a recent high, when it reverses and gets a trend change, you know, very, very simple to see. That's a recent high, so you know that's a possible wave 3. Okay? Very simple to do. We want to try to get on the 3 and 5 impulse waves. Let Jason do all the hard work. All these arrows do the hard work for us. Look at them right there. They are. Look at the big arrows. They did all the hard work for you. You just got to qualify if you're inside a market profile or a trend change for an Elliott wave. Okay? Target hit. Good job. 13.13 was my target. And sure enough, price came all the way down from 13.13. I said we got 50 more ticks on the subsequent position on this trade. And it solidified. Great work. Way to be patient. Let your runner run. Went right down to what I thought it would go to. So great job on that, guys and gals. Okay? Any questions on that at all? Good job, Jeannie. Good job. The shark bite's very simple because look at that. Look at the moving average get out of alignment. Right into news. See, a lot of traders, they'd see it in the downtrend and they'd be really scared of this big 5-minute bar up. Not us. We're smarter. We're more knowledgeable than the average trader. We predicted this pre-market. We predicted a big 5-minute bar going straight up if it did, right? We predicted that. And if it didn't, if it broke 13.10, we'd take it short down to 13.03, 13.04. Either way, doesn't matter. You got to know your levels. If you know your levels way ahead of time, if you can trade the fastest market with news, you can trade any market any given day. And these wave patterns work like this. It's a very controlled market. The market's not chaos. It's very controlled and orderly because it's electronically traded. A lot of algorithms push this around at certain levels. These Fibonacci dots are based upon a lot of these algorithms that's already buying and selling automatically. It's high frequency algorithms. We've got the same levels they're looking at because we know 62 to 76% is a sweet spot in the market based upon the thousands of trades we see stop the market. So we know we're with them, right? So since we know we're with them, just qualify the trade. Have you come off of a recent high? Yes. Get back inside your micro profile? Yes. That should be a wave 2 up. Then we look for a wave 3 down. Came off a recent high. My 13.20 was resistant. Got a trend change. As soon as you see that big red fat arrow, you automatically think wave 2 up. Stop at 62, 76%. Dead on. Arrow fires. There's your wave 3. Okay? Because look at this space down here, Jeannie. There's no support below market profile I saw, below 13.10 on the black charts. You see my level 13.0450 is actually 13.0450, not 13.03. Nothing but black. It's a black hole. What I try to do when I try to find my levels, I look at with J signal. It's easy. I mean, it's so clear to me on the 3-sim Renko because either I'm coming off of a recent high or I'm not. Right? I'm coming off of a recent high or I'm not. And it makes it easy to find the wave 3 with the arrow that automatically fires.